Hello traders, Gary Wagner here just before 10 o'clock in Honolulu, 4 o'clock in New York on Monday, the first day of June 2015, and this is the daily report for gold and silver. Gold in essence unchanged on the day, but the real story is the range that we have seen on this first day of June. We'll talk about that in a second. Currently 1190.10. The low has been 1184, the high 1204, and that's that high at 1204. That's important because we're looking for a clip just above 1200. As I said, we'll talk about that in a second. Silver also trading higher on the day, but nominally higher, up about 2 cents at 72.5, 1672 and a half. The high 1717, the low 1659. And lastly, the dollar. The dollar has moved back into resurgence mode. It is trading higher on the day, up about a half a point, and it's trading at 97.41. So if you recall from last week, we talked about the fact that as we looked at our Elliott wave count and our forecast models, short-term, interim, and long-term, in terms of our very, very short term, we were looking for a spike up, a soft spike up, but taking us anywhere between, I believe I said around 1196 to about maybe 1205. To illustrate what we've seen in the market, I've gone ahead and pulled up a very, very short term chart. This chart is 15 minutes in length, so it's extremely short term. And as you can see, as we go into the trading day here, we get this large spike up, which actually took us to 1204. Right at that point, you can see the market went under pressure, moving back down, now well below, of course, 1200, trading at roughly 1190. So we, in fact, might have seen that up spike that we were looking for, and we could be, in terms of the marketplace itself, short term, looking for a little bit of weakness to enter the market. So with that in mind, I've brought up our 4-hour charts, and this of course is in Japanese average format with our MACD and momentum index, which are sitting right above that. And when we look, for example, at the MACD, we're certainly not at a cross yet. In fact, we're a little bit shy of that. You can see we've got this little hook coming in here, but what we would have to see is we would have to see really a cross and then another cross like that, in which we would actually see this market begin to come down. So it does appear as though we could see some weakness, but we're not seeing it yet in the MACD. Also, when we look at just the Japanese average charts, these short-term candles, what we are seeing is really nothing concrete yet, because we've just gotten our first red candle come in for the last 3 periods, and here's where that market spiked up over 1200 for a brief instant. So we would want to see if we had any follow through and see the market move back lower. So traders, the next chart I do want to take a look at today is our half a day candlestick chart. Let's go ahead and compress this just a little bit and kind of move this over so that I can show you what I am looking at. In terms of a critical area of support, if you look at these various lows that we have here, this low here, and this low here, what we can then do is create a lower level support trend line based upon these lows, and we can say that as long as it remains above this particular trend line right here, there is an opportunity to find support. But a break below this trend line, my sense, would signal a fairly moderate to moderately strong sell within the market. Interesting as we look at the technical studies in terms of our daily chart, and that's what I have up now, because when we do that, our stochastics are telling us that this market could in fact be oversold. However, our MACD is just been crossing, and it's crossing, showing us that we could see some more downside pressure. And again, as I said, I think that on a technical basis, it's really whether or not we can see gold hold above these key levels of support, because I believe that that's a fairly critical level. We also talked about something I believe is very important, which is this head and shoulders that we identified. And if that unfolds, we most definitely would see lower pricing in the market. And that is why our models are based upon not only the Elliott wave count, but MACD and just classical Western technical analysis, meaning trend analysis such as the support line and head and shoulders as a pattern group. So these things are, I believe, really indicative of seeing this market potentially trade lower. We've hit that upper level at 1200 that we were looking for. Now it's a matter as to whether or not it can hold these levels or if we're going to see this market dip lower, which is what I believe is going to happen in the near future. So traders, what about silver? Well, when we look at our basic chart, this is our daily chart, continuous contract of COMEX silver. You can see that we do have our channels in, and within the channel, we're now at the lower end of the channel. We were at the midpoint just the other day. So we're at a point in which if we see it break below this, we should see lower prices. Our MACD is saying pretty much the same thing, and much in the same way that we did with gold. When we look at to try to define some support levels, we can see that that's well too low. So if we start from this low and match it to this low here, you can see that we're pretty much just below that point. So my sense is we could see weakness in both gold and silver. If we see the kind of follow through, meaning breaking through these critical support levels, that would actually trigger a sell signal in both markets. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.